What is the base and quote currency? The first member of every currency pair is called the base currency, and the second member of each pair is known as the quote or counter currency. For example, in the case of the euro versus US dollar currency pair, euro-dollar, the euro is the base member of the pair, and the US dollar is the counter member of the pair. In order to prevent confusion, the currencies in the euro-dollar pair should always be presented in their correct order. You won't see this pair represented as US dollar euro unless you are trading currency futures. Who decides which currency is the base currency and which is the counter or quote currency? That task falls to the International Organization for Standardization, or ISO. The ISO determines the currency codes and the order of the currencies within each pair. Whenever a currency pair is rising on a chart, this means that the base currency is strengthening versus the counter currency. This is true for every currency pair, like an example of the picture in front of you. The opposite is also true. If the base currency is growing weaker versus the counter currency, the chart will show the exchange rate of that currency pair falling. In the stock market, traders buy and sell shares. In the futures market, traders buy and sell contracts. In the Forex market, traders buy and sell lots. The smallest position that a trader can take in the Forex market is 1 micro lot. Each standard lot consists of 100,000 units of currency. So if you are long 1 lot of the euro-dollar currency pair, in reality you are long 100,000 units of the base currency and short 100,000 units of the counter or quote currency. Therefore, a trader who is long 1 lot of the euro-dollar currency pair is actually long 100,000 euros and simultaneously short an equivalent amount of US dollars. The entry or entry point is the point at which a long or short position is opened. This is where the trade begins. A stop order is an order that is placed to exit a trade if the exchange rate makes an unfavorable move. This is done to keep losses minimal and under control. A target is placed to exit a position if the exchange rate makes a favorable move. It is also referred to as a take profit order. The spot price is the value of an object or item right now or on the spot. This differs from a futures contract, which places a value on an object or an item in future. For example, suppose you want to buy a bottle of water. You are thirsty, so you want the water right now. The person behind the counter charges you $1 for a bottle of water. Therefore, $1 is the spot price of the water at that store. The price you'll pay right now or on the spot. On the other hand, suppose you want to lock in a price for water that you'll need in the future. You negotiate with the store owner, taking inflation, supply and demand, and future uncertainty into consideration. You agree on a price of $1.05. You have now entered into a futures contract for water. When you see a reference to spot or cash forex market, this is done to differentiate between the current spot market and the future futures market. A liquid or thick market is a market in which selling and buying can be accomplished with ease. This is because there are more buyers and sellers in a liquid market like forex. A market with few buyers and sellers is referred to as illiquid. Leverage is the ability to control a large amount of capital with a comparatively small amount of capital. For example, 1 lot of a currency pair has a value of 100,000 units of currency. In this example, 100,000 euros or 100,000 US dollars, and so on. Do we actually need to possess 100,000 euros or 100,000 US dollars in order to trade 1 lot of the euro-dollar currency pair? No. We can control 1 lot with as little as 1/200th of that amount. We could say a person who controls 1 lot in this fashion is using 200-to-1 leverage. The amount of leverage used by traders varies based on the individual needs and their comfort zone. Support is a point on the chart where the exchange rate has shown a tendency to stop falling. Support is not an exact price point but an area. Think of support as the floor beneath you. Resistance on the chart is where the exchange rate has shown a tendency to stop rising. Like support, resistance is an area, not an exact price level. Think of resistance as the ceiling above you. A breakout occurs when the exchange rate breaks beneath support or above resistance. A trend occurs when the exchange rate moves consistently in one direction, either higher or lower. A range occurs when the exchange rate has no clear direction and is contained within visible support and resistance levels. A consolidation occurs when the exchange rate is trapped in an ever-narrowing area. Consolidations often lead to breakouts.